Hello everyone. Uh, from now onwards, I'll be starting a series on standards on auditing. The first standard that I am taking is SA-250, that is consideration of laws and regulation in an audit of financial statement. So let me give a brief about this essay. So the requirement of this essay is set in such a way to assist the auditor in identifying the material misstatement of the financial statement due to non-compliance with laws and regulation. I would like to quote one line here that the auditor is not responsible for preventing the non-compliance, or it cannot be expected to detect the non-compliance with all the rules and regulation. Its duty is to identify the material misstatement due to non-compliance with laws and regulation. So first, the auditor has to identify whether the organization is complying with the laws and regulation or not. If it is not complying with the laws and regulation, then its duty is to identify the material misstatement due to the non-compliance of the same. So this is the brief about the this essay. Now, first of all, I like to highlight whose responsibility is to prevent the non-compliance and detect the non-compliance. So the responsibility is of management. So I will be starting this presentation by stating you the responsibility of management. So the next slide comes where I have mentioned the responsibility of management for compliance with laws and regulation. So the responsibility of management with the oversight of those charged with governance to ensure that entities operation are conducted in accordance with the provision of laws and regulation. And the laws and regulation also include the laws and regulation that determine reported amount and disclosure in entities financial statement. So coming to the next heading, that is policies and procedure implemented by the management to assist prevention and detection of non compliance with laws and regulation. So I have stated some examples that can be implemented by the management to assist the prevention and detection of non compliance. So they can have they can monitor the legal requirements, and they have to ensure that the operating procedures are designed to meet these legal requirement. The second one can be instituting and operating appropriate system of internal control. They can institute and operate appropriate system of internal control. The next 3 points are related to code of conduct. So management can develop, publicize and follow the code of conduct, and they can also ensure that the employees are properly trained and understand the code of conduct. And they have to monitor also that compliance with the code of conduct and acting appropriately to discipline the employees who fail to comply with it. And the last one is that management can also maintain a register of significant laws and regulation in which employee has to comply. So these are the few examples of policies and procedure that can be implemented by the management to assist the duty of management, that is preventing and detecting the non-compliance. As I have mentioned earlier also, that prevention and detection is not the duty of auditor. Auditor duty is to check whether the organization is complying with the laws and regulation or not. If not, then identify the material misstatement and its effect on the financial statement and give their opinion according to the same. Now coming to the next slide, which states these following lines that I have explained you earlier also. The requirement in this essay are designed to assist the auditor in identifying material misstatement of the financial statement due to non-compliance with laws and regulation. However, The auditor is not responsible for preventing non compliance and cannot be expected to detect non compliance with laws and regulation, because the prevention and detection is management's responsibility, not auditor's responsibility. So, what are the responsibilities of auditor? So, the auditor's responsibility is to obtain the sufficient and appropriate evidence about compliance with the provision of those laws and regulation that have direct effect on the determination of material amount and disclosures in the financial statement, such as tax laws and labor laws. So the first requirement I have stated is that the laws, they have to ensure that the organization is complying with the provisions of laws and regulation that have direct effect on material amount. Material means significant amount, the amount that matters to the organization. And the second one is they have and the auditor's responsibility is limited to undertaking specified audit procedure to identify non compliance with those laws and regulation that do not have direct effect on the determination of amount and disclosures in financial statement, that we have discussed in first point, that they have to ensure that the laws and regulation are properly complied, that have direct effect. But the second point states that they do not have they should also identify the non compliance with those laws and regulation that do not have direct effect on the determination of amount and disclosures, but it after that also it has to be complied, because compliance can be fundamental to operating aspect of business, to an entity's ability to continue its business, or to avoid material penalties. So these two are the responsibilities. In first we stated that uh, the organization has to comply with those laws and regulation that has direct effect. The second explains that the auditor has also to ensure that compliance is made of those laws and regulation that do not have direct effect on the determination of amount and disclosures, but it is fundamental, but the compliance of those laws and regulation is fundamental to operating aspect of business, to entities ability to continue its business, and to avoid material penalties. Examples can be compliance with the term of operating license, compliance with regulatory solvency requirements, compliance with environmental regulation. So now before coming to the next slide, I will state you some examples which are the indication of non-compliance with laws and regulation. So the first can be investigations. If investigations by regulatory organization or government department or payment of fines and penalties is made by the organization, so it can be an indication of non-compliance. The second can be purchasing at prices significantly above or below the market price. Other can be sales commission or agent's fee that appear excessive in relation to those ordinarily paid by the entity or in its industry or to the service actually received. So these are few examples that indicate non-compliance with laws and regulation. Now coming to the next slide, first heading is the auditor's consideration of compliance with laws and regulation. So auditor should have these five things, should comply with these five things. First is that auditor should obtain general understanding of the legal and regulatory framework applicable to the entity and industry or sector in which the entity operates, and how the entity is complying with that framework. This is first point. Second point is compliance with sufficient and appropriate evidence. So the auditor should obtain sufficient and appropriate evidence regarding compliance with the provisions of those laws and regulation that have direct effect on the determination of material amount and disclosure in the financial statement. The third is the audit procedure to identify instances of non-compliance. So the auditor shall perform the following audit procedures to identify instance of non-compliance with other laws and regulation that may have material effect on the financial statement. The fourth one is that auditor shall remain alert to the possibility that other audit procedure applied may bring instances of non-compliance or suspected non-compliance with the laws and regulation to the auditor's attention. And the fifth and the last one that should be considered by the auditor is obtain the written representation for instances of non-compliance and suspected non-compliance. It has been disclosed to the auditor. Now the next topic is audit procedure when non-compliance is identified or suspected. So the first point I have mentioned is that auditor is aware of the information concerning non-compliance. In this case, the auditor shall obtain an understanding of nature of act and circumstances in which it has occurred and further information to evaluate the possible effect on financial statement. The second I have mentioned is that auditors suspect that there may be non-compliance. Okay, so this is the example of suspected non-compliance. So what auditor should do in this case? So the auditor shall discuss the matter with management and where appropriate, those charged with governance. If management or as appropriate those charged with governance do not provide sufficient information that supports that entity is in compliance with the laws and regulation, and in the auditor's judgment, the effect of suspected non-compliance may be material to the financial statement, the auditor shall consider the need to obtain the legal evidence. The third one I have written is cannot obtain sufficient information about suspected non-compliance. So if the sufficient information about suspected non-compliance cannot be obtained, the auditor shall evaluate the effect of lack of sufficient and appropriate audit evidence on the auditor's opinion. So it has to evaluate the effect of this lack. And the auditor shall evaluate the implications of non-compliance in relation to other aspects of audit, including auditor's risk assessment and reliability of written representation, and take appropriate actions. Now, the last topic that I am going to discuss is reporting of identified and suspected non-compliance. So, if the non-compliance is intentional or non-intentional, so the auditor can communicate it with those charged with governance as soon as practical. If he comes to know that management and TCWG both are involved, then it shall come. If higher authority exists, then the auditor shall communicate with them. If there is no higher authority, then the auditor can consider the need to obtain the legal advice. Higher authority here means the audit committee or supervisory board. Hope you have understood this concept well, and if you have any other doubt regarding this essay, then please comment below. So this is it from my side. Thank you.